Let's now discuss the concept accounting for depreciation. See, depreciation is nothing but loss in value of property, plant, equipment. Currently, we will call the assets as property, plant, equipment only by default. Rather than calling that as a fixed assets, it's better to call that as property, plant, equipment, because as per AS number 10, we confine our assets into only these types: property, plant, and equipment only. Property deals with building like, and plant you are aware about, right? So plant and machinery. The difference between plant and machinery is nothing but anything movable form of item will be called as machinery. If it is not being movable, then it is called plant. And equipment also being part of that. Even sometimes plants, tree, whatever it may be, tree, plants will also be considered as asset in some cases, property, plant, and equipment. So all these things are dealt under AS number 10. Accounting standard. It's a standardization. So, if you are purchasing an asset for rupees say 1 lakh, this 1 lakh will not be considered as an expenses in the very first year itself. Assume that this asset will work for around 5 years, or decently we can use it proper purpose, or for the operational purpose, or for production purpose, or for rental purpose, whatever it may be, for 5 years. After the 5th year, it becomes useless. So then the 1 lakh what you have paid gives you benefit for more than 1 year. That too, the benefit spreads over up to 5 years. After the 5 year, it becomes zero only. It's worthless. Then by the time it's an expenses, right? If you consider the entire loss being the entire value of this 1 lakh being the loss in the 5th year, it's a big loss. We should not do that. We should not do that. Rather than debiting that entire 1 lakh rupees as a loss at the time of selling or discarding the assets, we can spread out that expenses or loss over the life. So each and every year we debit 20,000 rupees, nothing but 1 lakh divided by 5 years. 20,000 rupees can be debited to the P&L account or income statement, because to the extent of assets we enjoyed, its benefit will be debited to the P&L account. So this 20,000 can be debited to the P&L account in the very first year, and balance value remains as your asset, unconsumed value. See, this logic will be applicable for all. When you purchase 1 lakh rupees worth stock, material for sale purpose, after selling around 80,000 rupees worth stock, remaining 20,000 units are worth units or stocks remains unsold. What you can do? The unsold units of rupees 20,000 can be considered as an asset transferred to the balance sheet. The same logic will be applicable here also. 1 lakh goods purchased, 80,000 of goods sold for some profit, remaining 20,000 worth of goods is not sold as such now, can be transferable to the balance sheet as an asset. 1 lakh rupees worth asset purchased, you enjoyed 20,000 rupees worth of the asset will be named as an expenses, debit to the P&L account. Balance, what is that? Unused assets will have the benefit in the future, can be transferable to the balance sheet asset side. Can be transferable to the balance sheet into the asset side. But when it comes for the in general non-current assets, will have the benefit for more than one accounting year. More than accounting year. But when it comes for the current account, within the next year, as on 31st March, from the date, within 1 year, we can enjoy the benefits. That's all. We cannot enjoy the benefits beyond that, then it's called current asset. As on 31st March, from there, we can still enjoy the benefit for more than 1 year, then it's called as non-current asset. So you can understand the two classifications, current assets and non-current assets. Whatever the payment you do, for that payment, you enjoy the benefit within that financial year for which you are accounting expenses. You still have the benefits to be enjoyable in the next financial year, then it is an asset. And subsequently, compare whether the benefit extends only 12 months or more than the 12 months. If it is for only 12 months after the 31st March, then it's called current assets. No, it will give benefits for more than 12 months, then it's called non-current assets. In this scenario, when it comes to the long-term assets or non-current assets, to the extent of benefits enjoyed every year will be debited to the P&L account. This is the P&L account item. and this is the balance sheet. This is the thing we are debiting in the P&L account very first year. This is the amount going to be considered as an asset to be shown in the balance sheet. In the second year, another 20,000 rupees could have been considered as an expenses. Balance will be your asset. In the third year, another 20,000 rupees is debited in the P&L account, and thereafter the balance sheet has the value of the assets being only 40. And fourth year, the value lost because of the consumption or usage of the asset is 20 debited to the P&L account, and now the balance sheet has the value of the assets being 20. Fifth, and 20,000 rupees is also being considered as a loss and expenses debited in the last year. Thereafter, we don't have the assets. So, such a way, whatever the payment you made gives me benefit for more than one accounting period, means that entire payment will be spread over to that years. Right. Loss in value. Each and every year, this value is reducing. Right. 80, 60, 40, and 20. This is called loss in value. And also we have segregated this value and debited to the P&L account year on year up to 5 years. Am I right? That is called depreciation. Is the allocation of depreciable amount of property, plant, and equipment over its estimated useful life. Now you have to understand the term depreciable asset. Depreciable asset is nothing but the original value at which you purchased minus scrap value. It may be realizable at the time of end of its life. Whatever the asset you purchase may have a useful life of say 4 years or 5 years. After that 4 or 5 years, what happens? It becomes useless. As it becomes useless, or though it may be useful, but it may be costlier to use it. Then why do I want to use? We will just discard that. If I plan to sell in the market, it may realize some money. Around 10,000 or 20,000 rupees. That is called residual value or scrap value. In this case, assume that 100,000 rupees is the value of the asset. We assume that by the end of 5th year, it will fetch you 20,000 rupees. It means the difference between these two is 80, is nothing but the loss in 4 years. This is the loss in 4 years. This loss will be spread over for the life of the asset. If the life of the asset be 5 means, each and every year you are going to debit 16,000 to the P&L account. In the very first illustration here, I assume there is no any scrap value or scrap value being 0. If I assume the scrap value being 20, from the 120 is subtracted, 80,000 is nothing but what? 80,000 is depreciable amount. This is called depreciable amount. That depreciable amount is going to be adjustable over the lifespan. And you understand that depreciable amount is nothing but cost minus scrap value. And one more point I have to discuss here is, it's a non-cash expenses. The nature of the depreciation is non-cash expenses. See, if you are making any payment for the expenses, what is the journal entry you will usually pass? Expenses account debit to cash. If you are paying rent, say 15,000 rupees, then rent account debit to cash is the entry. Is that okay? Rather than paying the rent, you have purchased the land and building for rupees 10 lakhs. As you have purchased the land and building for 10 lakhs, we assume the amount to be a loss for every year, being 10% of that is equal to 1 lakh. Right? That 1 lakh is considered as depreciation. That 1 lakh is considered as depreciation. Is that okay? The value of land and building, because the land and building will give me benefit for more than one accounting year, and as it has life for more than one accounting year, for each and every year of usage, the value of the asset will go down. Now I have to estimate what is the value it's going to be losing every years of use. I assume roughly around 10% of this 1 lakh means this 10 lakhs may be lost because of the usage. As per this calculation, out of 10 lakhs, 10% to 1 lakh is going to be loss in this value of the assets, or value reductions of the asset. And this value is named as depreciation. Now, come on, tell me what is the journal entry for the depreciation. Depreciation is the expenses. What is the journal entry for the depreciation? Come on. Yeah. Depreciation account debit to not cash. That particular asset is going to be charged. Here, the asset is land and building. The value being 1 lakh. Is that okay? See, whenever you make a payment for rent, wages, advertisement, parallelly it will have the impact in the balance sheet's cash and bank balance. That cash and bank balance will go down, right? So the cash and bank balance will go down. But when it comes for the depreciation, which is nothing but loss of value of the assets, cash has not gone out at the time of debiting the depreciation, the P&L account. But it will be a reason for the reduction of the assets value in the balance sheet. Rather than subtracting the payment for rent and EB from the cash account, I am going to subtract the depreciation from the concern asset. So, because of depreciating or deducting from the concern account, there will not be any impact in the cash. Will not have any impact in the cash. That's why it is called as non-cash expenses. Is that okay? Hope so you could understand. Assets lost. In what are the scenario, the value of the assets is going to be lost? In what are the types of assets, the value of the assets may be lost? When it comes for the land, will it lose its value or increases its value? Predominantly increases, then usually we won't create any depreciation for the land. But of course, we can sometimes create the depreciation for the land also. Sometimes the land may lose its fertility, or the land may have its mineral. After the extraction of the mineral, the land's value may go down, may also be possible. So we should not always confine ourselves prejudice or any other knowledge. You try to expand your views by applying practically. There's a landmine. Okay, you might have seen the movie KGF. If you are extracting the gold, after the extraction, what happens to the KGF? How many of you visited KGF recently? Probably around 5 years or 10 years within that limit. How many of you visited KGF? Around 15 years ago, I visited KGF. I went there and showed me this is KGF. I just roam around there and no one is allowed to enter inside. Because of mining the gold, there may be lots of pit holes. Okay, if you fall down, you will not come out. That's the biggest mine there. Is there any gold available in the KGF still? Yeah, of course, gold is available. But to extract one gold and purify, it costs us 10,000 rupees. Already it's available in the market for 4,000, 5,000 rupees. Extracting for 10,000 and selling for 5,000 is meaningless. So the KGF is now kept vacant. The entire premises, the entire land is now kept under surveillance, that no one should enter inside. Why? Not in the fear of stealing the gold, because the stealing of gold is not possible there anymore, but still the fear of life. If any people enters into that, and there may be risk of losing the life also. So because of that pitfall and all, it's dangerous now. I just surprised, if they could have planned ahead, the land could have been, after removing the gold, they could have reset for any other purposes. No, now they've lost the entire land. It's kept idle. The same happens when we extract the copper and whatever it may be from the land. Thereafter, the land becomes useless sometimes. Okay. See, always you should not have the blind idea that land will be always appreciated. Sometimes it may be depreciated also. Anyhow, in general, land is non-depreciable asset. It's not going to be depreciated. And depreciation is, already we have seen the value of asset is being lost, which is nothing but depreciation. Now the main reason, some of the reasons are going to be discussed here. Causes of depreciation, some of the main reasons are going to be highlighted here. One is physical wear and tear. Okay, if you are constantly using, the value of the asset will definitely go down. This is due to loss. Sorry, due to use. If the value of the asset is lost due to use, then it is called physical wear and tear. If you purchase a gold chain with 8 grams, 1 sovereign, sometimes later, 1 year later, if you go and verify, the weight of the gold may be around 7.5 grams only. Half a gram may be lost. Somehow, because of the usage, it will lose its own value. That loss is called physical wear and tear loss. And sometimes it may be passage of time, effluxion of time. Passage of time or simply effluxion of time. Okay. I may sometimes purchase some assets. The asset will be working only for 5 years. Already 3 years gone, thereafter only be left with the 2 years. Whether you use it or not, 3 years gone means the value has been lost to that extent. Is that okay? You top up your mobile for 2 years. If you don't use for 1 year, what happens? Can you enjoy the entire thing in the next year? No. You can enjoy only for 1 year. The next year it will be lost. Constantly you have to use. Whether you use it or not, the value of the asset will lose. Because of what? Passage of time. Passage of time. That will be otherwise named as effluxion of time. 3. Obsolescence. Outdated. Okay. Nowadays we have only what type of mobile? Android predominantly. Anybody using still that same button mobile? It's again a problem for us. We don't have that mobile. I don't know for how long we are going to use this mobile, Android mobile. Sometimes later, smart watch will come and smart glass will come. Okay, except smart people, right? So all the gadgets may be smart in the coming days. So once a new thing comes, the old things becomes useless. We are not going to use it anymore, right? So the old mobile is now not available, and old-fashioned watches. How many of you are still wearing the watches? Okay, in our days when we studied in college, no, the charm is purchasing the different varieties of watches, sports watch and all. And when I referred the financial reports of Titan, surprised that company is making huge profit. Only I got surprised. Who wears the watch? Most probably you are not wearing the watch for seeing the time, because already time can be seen from your mobile. One gadget is for all, but the watch is instead of bracelet somebody will wear. How many of you are wearing the watch instead of bracelet? Okay, here, there. Okay, very good. So the purpose is now lost. The purpose is lost, right? Obsolescence, outdated. Outdated. Outdated means old dated. Obsolescence. Value loss by change in technology or taste or fashion. Value loss by changing the technology, taste and fashion is called obsolescence. 4th, depletion. Depletion, you might have heard about the term ozone depletion. So depletion is nothing but becoming lesser because of usage, becoming lesser. In the mining industry, I want to establish a mining industry, coal mining, copper mining, okay. Then the oil ore extraction by Reliance, whatever it may be. They might have found out some oil mines nearby Godavari and there, okay, oil mines. They will examine how much quantity available there by scanning and some machines. They found that 1 lakh ton coal may be available here. 1 lakh ton. Will that 1 lakh ton be there? And always means no. If you start extracting each and every day, the mine available that will be reducing. KGF, Kolar Gold Factory. Gold was extracted by the time ruled by English. But now we don't have the gold because already extracted, the gold is not available. So the day by day, if you are extracting, the quantity available in that land will be decreasing. So that kind of assets will lose its value because of depletion. Because of depletion. See, imagine I find in this place beneath, we find out 1 lakh ton of coal. Immediately this landowner will give the rights to extract this to somebody else, probably XYZ. I may be the landowner, but I don't have the option. I don't have the capacity to extract and market it. Some corporate companies will have that facility. I can extract, I can do some refining work, and I can go for marketing also. But being the landowner, I don't have that option. So I just give my land in lease to the company. And the company offers me, sir, you can take 10 crore rupees for this. This 10 crore rupees I get. And the 10 crore rupees paid by the company. Okay, for the company. For me, it's a revenue. For the company, it's an asset. So the moment all the 1 lakh ton extracted, this 10 crore becomes zero. The 10 crores becomes zero. In the very first year, I extracted only 20% of this quantity. Rather than 1 lakh, I have extracted 20,000. To that extent of this value is now decreased, which is called depletion. To that extent. Physical deterioration of natural resources like ore deposits in mines and oil wells. For these kinds of assets, the license fee what I paid will be lost over its tenure, is called depletion. Fifth one is all about amortization. The term amortization is nothing but again depreciation for the intangible assets. If the assets being intangible, we don't call that being the depreciation, it is going to be called as amortization. Okay, just now I talked about COVID, Covishield and the Covaxin, or the vaccines for COVID. They could have spent so huge money for the R&D. They might have spent around 1,000 crore rupees. 1,000 crore rupees. Is that okay? That's what about the intangible assets. They will now amortize. Amortize means depreciate this value in the P&L account. How do they depreciate? The business will run for around 3 to 4 years. Okay, now already COVID is gone, 2 years is gone. Now, very rarely the vaccination is used. Are you still using the vaccinations? No. The 1,000 crores they have used for R&D purpose is no more useful after 4 or 5 years. So, they have to debit that to the P&L account over the 4 or 5 years. 250 rupees is going to be debited to the P&L account, the R&D expenses. They have spent the money for the research and development. They invented the Covishield or Covaxin. They got the patent rights from the government that I am going to sell this product. No one should copy me. Such a patent right I possess, but that patent right will have the value only for 5 years. So much of huge money is spent now could be spent within that 4 or 5 years. That's a logic. So each and every year 250 rupees is going to be debited to the P&L account. 250 rupees is debited to the P&L account, but that term is not called as depreciation, it is named as amortization. Sixth one is dilapidation. Dilapidation. Dilapidation is nothing but deterioration. Deterioration is nothing but value loss. Value loss. Here also I use the term deterioration. Due to old age, especially old building. Okay. Around 1 or 2 years ago, the old buildings were valuable. Has more revenue also. Do you know? Old buildings. Some years ago, if you are being in Tamil Nadu, you might have enjoyed the demand for the old buildings. Right? Through what? Lots of ghost movies in Tamil. A series of ghost movies. Kanchana 1, 2, 3, 4, everything came. Only using that old buildings, right? So the old buildings, no more is now useful. If you enter into the old building, we are not sure with your life. Any times the floor may be on your head. So that will also be happening. Hereafter, it's not worth living there. Such house property will be called as dilapidated one. Because of the old age, the value of the building is lost. Can be debited to the P&L account in the name of depreciation. Seventh one, changes in economic environment. Changes in economic environment. Okay. Now, around 20 years ago, I had a bike, Yamaha bike. Probably 20 years ago, I had a Yamaha bike. So when I had a Yamaha bike, it seems to be a luxury one, like rather than going for a normal TVS, Suzuki and whatever the company, I had a Yamaha bike. Sridhar is using Yamaha bike. Now, you can see so many people coming with the car by default. Okay. Few cars and so many bikes were in the traffic signal. When you visit in Chennai or Delhi, you can see so many cars. Here are there 2 or 3 bikes you can find out in the traffic signal. Because the economic environment is changing there in Trichy, slowly developing. In Chennai also, you can see 50-50. 50% car and 50% bikes are standing in the signal. But once I go in Delhi, surprised to seeing only cars, here are there 2 or 3 bikes. Okay. I told my cousin who was there in Delhi, I supposed to go here or there to roam around in Delhi. He immediately told me, just take my car. I said, car in Delhi may be surprising. No, you can manage. No, no, only I managed. Missing out of 3 to 4 times of the same route. So happened. Then worst scenario and worst experience that I had. Anyhow, I had the passion of to drive a car, manage that. Otherwise, I may be totally frustrated there in Delhi. Right. Though they have the bike, but they started driving only car, changing the economic environment. Though we are capable of going by either auto or car, we started moving only by car because we want to have the comfort. Though we can plan to go for a small bike ride, we plan to go for car. So that's what about the change in economic environment. Though you can plan to go by a non-AC train, you plan to go for AC. Not only AC, you need to go for a super fast express like Tejas. You want to expect for still more. That's what about economic environment. Still the old trains are still working. But will you go that? No, because you are economically developing. So the economic environment change is also helping you to make the old material or old assets irredundant. Right. Expiration of legal rights. Expiration of legal rights. Is that okay? When you purchase some assets, the seller will tell you you are able to use it only for 5 years or 10 years. That's what about legal right. Beyond that, you cannot take. Okay. So license will be given to you. So you can use it only for 5 years. For example, Tally software and Windows software, whatever it may be, if you purchase, they will give only for 5 years. After the 5 years, you have to renewal. So matter of 5 years later, it becomes zero. Some software, SPSS software is there, AutoCAD software is there. You are aware about the Windows. That's why I gave the example of Windows and MS Office. AutoCAD and SPSS software were very expensive. When I thought to purchase the SPSS, and by the time it was around 3 to 4 lakhs. Just imagine 3 to 4 lakhs. If I purchase a software for 3 or 4 lakhs after spending, they will give me the rights to use it for only 4 or 5 years. So within 4 or 5 years, that entire 2 lakhs will be lost, means you have to amortize over that 4 or 5 years. So these are the causes we have for the depreciation. Let me brief once again. Physical wear and tear, effluxion of time, obsolescence, depletion, amortization, dilapidation, changes in economic environment, expiration of legal rights. Is that okay? More than 1 year. It can be usable for more than 1 year. And that too, it has a limited life, limited useful life. Okay. Understand this? Limited useful life. It will have the life, but it has a limited useful life. Is that okay? So the asset will be useful for 4 or 5 years. After that also it is useful, but it's not economically viable. Okay. I have a bike. In the very first year, it's very comfortable. I don't have any repair expenses. 15 years later, the same bike, if I use, what happens? Repair expenses will be heavier, and halfway through, I have to always carry the bike if I'm being triple R type. Triple R type. Have you seen that movie? RRR. Such a way I have to carry the bike. That problem will be there. Have you seen that or not? Okay. Useful life. That bike may be useful for 7 or 8 years. After 7 or 8 years, of course, it's still working, but it will create lots of problems. So we have two different types of life here. One is useful life, another one is physical life. I'm talking about the useful life here. You understand that? So useful life, you have to note it down. It's not physical life, useful life. And this is held by the enterprise. This is enterprise used by an enterprise for use. For use in what? Either they can use the asset for production or supply of goods and services. Okay. Using the plant and machinery, I can manufacture furnitures. Okay. Using the plant and machinery, I can do any services, or I can render any services. Okay. What sort of services I am able to do? In the case of construction industry, for the concrete mixture. So I need to depend on the plant and machinery concrete mixture, where the cement and stones are mixed together to prepare the concrete mixture for the laying the roof and all. So where concrete mixture is used for rendering some sort of services to you, also being a part. And car spa. car cleaning and whatever it may be, water cleaning, that also be coming under services. For that, I may use that entire equipments for cleaning the car will be also my asset. And whether I use it or not for my production or rendering the service, I can let it out for somebody else. I have 10 cars in the Zoom car. You might have heard about the car, Zoom car, self-owned car, self-driven car. Rather than you can get the car in hire, you can get the car in rental and you can drive yourself. That's called self-driven car. It's available predominantly in Trichy also in Zoom car. You can get it for a day's rent and you can travel. So Zoom car purchased around 10 or 20 cars and kept for renting purpose only. That is also their asset. And it may be used for administrative purposes also, to bring the office staff and printing machineries and billing machines and all there in the office will also be an asset, and not for the purpose immediately, not for the purpose for sale in the ordinary course of business immediately. So they are not going to, if I am being the furniture mart owner, I am purchasing the furniture. What is the intention? Selling the furniture. And there is a Vasant and Co. They are purchasing the fridges and bureau and all. Okay. Fridge may be an asset for us or petty shop owner. But for Vasant and Co. or any other electronics, sharp electronics, whoever it may be, they purchase it for sale. So that will be coming under purchases, not asset. So you have to keep these points in your mind. Also will be part of the depreciable assets. So property, plant and equipment. Is that clear? Now, to manufacture a table, they are in need of wood and carpenter service, and for cutting and polishing we need to have the machine. Wood being 5,000, carpenter salary being 5,000, machine cost being 10 lakhs. Come on, tell me, what is the cost of production of table? What is the cost of production of the table? 10 lakhs, 10,000. Oh my God. What is the cost of production of the table? Will you be able to purchase a table for 10 lakhs, 10,000? Yeah. This 10 lakhs rupees worth the machine can be used to manufacture table of how many numbers? That's a matter, right? Probably around 1,000 table. We assume that the machine can be used for manufacturing 1,000 tables. It's not for manufacturing one table. Now come on, tell me, what is the cost of production? 10 lakhs is for manufacturing 1,000 table. Roughly it costs me 1,000 rupees per table manufacturing. Then wood being 5,000, carpenter wages 5,000, and the value lost because of using the machine for manufacturing the table is 1,000. So the overall cost we spend for manufacturing the table is 11,000. Okay. Sale value being 15,000. Then what is your profit? Your profit is 4,000. Now come on, tell me, what is the value of the asset? What is the value of the asset? Yeah, come on. What is the value of the asset? 10 lakhs. Where I have used 1,000 rupees worth of asset for manufacturing the table. Hereafter it is only 9 lakhs 99,000. Isn't it? Okay. What are the objectives of depreciation? Let's see here. Okay. Fourth point. Ascertainment of true cost of production. If I am not able to find out the value lost because of producing the table, I cannot find out the cost of production. Am I right? Otherwise, we may be misguided with the higher value, 10 lakhs, 10,000, like we may be misguided. The value of table or cost of production of the table being only 11,000 is possible only when we know the depreciation value correctly. Point number 1. And if I am not sure with this, I am not able to find out the profit also. The correct income measurement is also possible by providing the depreciation properly. Now, what is the value of the assets? What is the value of the asset? True position of statement. In balance sheet, you have to write the asset side, the value being 9,99,000 rather than 10 lakhs. 9,99,000, isn't it? Because of depreciation, the value is going to be adjusted, else the statement may be wrong. This is also possible. Next, if you manufacture around 950 tables, what happens then? What is the depreciation? 10 lakhs. For every table, you are losing 1,000 rupees worth value. For 950 tables, you might have lost how many? What's the value you may be losing here? 9.5 lakhs, you might have been losing that. So, balance 50,000 rupees. Now, after manufacturing 950 tables, your balance sheet shows that machinery's value being only 50. If the machinery's value is closer to 0, what does it mean? It's a great indicator that you're supposed to replace, otherwise the subsequent manufacture will be your trouble, right? So, I have to be double cautious here. So, when it is closer to the scrap value, you can plan yourself much ahead to fund for that. So, fund for replacement at the end of its useful life. So, it's closer to the useful life, you plan to replace that. So, these are the objectives for providing depreciation. Why do I provide the depreciation in the P&L account? So, number 1, correct cost of production is to be calculated. Unless we find out the cost of production, income also cannot be calculated properly. So, second is calculation of income is also possible only when we have the depreciation. Third one is the financial report shows the correct value of the assets after the adjustments of the depreciation. Else, the assets could have been over inflated. And fourth one is after deducting the value of the depreciation of the assets over the years, when it is closer to the residual value or scrap value, we are supposed to plan for replacement. So, that will be coming under objectives for providing depreciation. Is that clear? This will be very often you can expect in your examination as a theory. Okay. Original or historical cost is the number 1. Expected life and estimated residual value. These are the 3 factors are there. Okay. See, the amount of depreciation, I represent that being D, amount of depreciation, is nothing but depreciable as a depreciable value divided by the life. Depreciable amount by life or number of years of life. This depreciable amount is nothing but original value minus scrap value is the depreciable value divided by number of years. Okay, the life of the asset. Now, among the 3, which is the clearly known figure, original value or scrap value or the number of years of life? Among the 3, which is the clearly known one? Nothing. Original value is also not known, scrap value is also not known, and life of the asset is also not known. In our studies, in our school's study, in a practical life, this is one of the toughest chapters. How many years will you live? Will I live? No one can predict. I purchase will work. I'm not sure. Sometimes I purchase a mobile, happens to be 4 or 5 years of life, but suddenly got malfunction in a matter of 1 year. So, we are not sure. So, life is also not sure. Scrap value, how do you know? The asset after 5 years will be valuable for 5,000 or 10,000 rupees. You are not able to predict that also. So, life is also a non-predictable one, and scrap value is also non-predictable. Predominantly, you can at least guess the original value at least. There also some problem exists. Anyhow, at the interior level and subsequent level, you learn that in detail, original value. How that original value will not be static number, cannot be determined that as a static number, why it is also changing. I could have purchased one asset from foreign, probably $1 lakh. The seller in foreign country may say, sir, you can take 6 months time to pay it off. Okay, very happy because he has given me credit to repay that after 6 months. So I purchased it for $1 lakh, dollar 1 lakh. He gives me 6 months time. Very happy. 6 months time is there, right? But at the time of purchase, $1 is equal to rupees 7 lakh. So when I verify the dollar rate in the local market, it's 80 rupees. Oh my God. Unwantedly, now I'm paying 5 rupees excess for the same asset. Now, what is the value of the asset? At the time of purchasing the asset, I could have shown the value of the assets being $1 lakh into 75 rupees in terms of Indian currency. Right? $1 lakh, $1 is 75 rupees. So 1 lakh into 75 lakhs is the value I supposed to thought. But on real payment, I had to pay 80 rupees per dollar. So 80 lakhs is the value. I had to adjust the original value also. So then how do you calculate the depreciation? So many adjustments are there. You have to think over in practical life. Anyhow, we'll confine that all the three numbers known first of all. If all the three numbers are subject to change in the later, how do I treat the accounting or depreciating that? We'll study the second part. That's what about the professional education part. We'll be studying that. First part is the basic. I try to finish up the first part, which is nothing but calculating the amount of depreciation blindly, assuming that the original value, scrap value, and life of the assets in years is also known. Practically not possible. All these things will be changing. If all the things are changing, how do we calculate the depreciation? What could be the impact and the amount of depreciation in the subsequent period will be studied as per AS number 10. Property, plant, equipment, the valuation process and depreciating process given in accounting standards number 10. At the intermediate level, you will be studying in detail of these things. At foundation level, you will be having that knowledge and only one idea you are going to implement in your examination. And if you are being the CMA foundation, very simple, you will be confined with the first level, especially straight line method of depreciation as well as Wdb method of depreciation. Ahead of that, you don't need to study anything. Right, if I am aware about these things, very comfortable. So, two aspects to be studied here. One is method of depreciation. Next one is accounting of depreciation. Accounting. How do I pass journal entry for depreciation? We will be studied in the second part. In methods of depreciation, we have n number of methods of depreciation, around 11 or 12 methods which are supposed to study for the CA foundation. And among the 11 or 12 methods, two are predominant. Straight line method of depreciation as well as written down value method of depreciation are the predominant one. Apart from that, we have some other methods like annuity method, sinking fund method, insurance policy method, production units method, kilometers traveled method, and production liters method, kg methods, replacement cost method, and repairs provisions method. So many methods we have. Some of the years digits. I got that in my books. No. Again, in that also we have predominantly two models, and second model will have one variation. So we'll understand this way. Okay, two models of accounting the depreciation, and there are, of course, we have the variations. Okay, one more variation. Okay, one is direct charge of this depreciation to the P&L account. Another one is creating the provision model. Provision for depreciation. One model where I am debiting the depreciation to the P&L account. Another model I am creating the provision. The depreciation is adjusted in that assets. Another case, the depreciation is accumulated in the provision for depreciation in detail. One is deducting from the assets. Another one is accumulating in the provision for depreciation. In methods, two methods are most important. One is SLM method. Another one is Wdb method. Is that okay? And subsequent further learning, as you are aware about that, the factors affecting the amount of depreciation being original value, scrap value, and the life. All the three are not static number. It will be changing. If these three are changing, then your calculation of amount of depreciation under SLM, Wdb, then I will go for the Wdb method. And what is the formula for calculating? So I'll just start with SLM method. What is the formula for calculating the amount of depreciation? As three factors are there: original value, scrap value, and life. D Capital D represents amount of depreciation. Capital D represents amount of depreciation. I am using that notation. Small d represents rate of depreciation. Amount of depreciation is different and rate of depreciation is different. It should not have any confusions. If it is a round number, then it is amount of depreciation. If I am mentioning that in person, then it's a rate of depreciation. Rate of depreciation under straight line method, written down value method, sum of the years digits method. These are the three methods. So leave the first of all, we'll confine our understanding with the first two methods, straight line method. The two straight line method will be first of all, and past journal entry. The past journal entry is nothing but accounting of depreciation. We'll deal it later. And its scrap value at the end of the useful life could also be given here. So original value being 65,000, scrap value being 5,000, life being 4 years. 1,000 rupees by the end of 4th year, I'll keep it pending current. Okay, currently I'll just keep it pending because it is going to be incorporated while accounting the depreciation only, not required for the depreciation calculation. Now come on, tell me what is the amount of depreciation. Apply the formula, original value minus scrap divided by the life. So you see, you no need to mug up this as a formula. I purchased it for 65,000 rupees. It will be only 5,000 rupees by the end of 4th year, means you are losing 60,000 rupees over the period of 4 years. Per year you are being the loser of 15,000 rupees. Is that okay? Let's see here. 65,000 minus scrap value being 5,000 and life being 4 years. 65,000 minus 5,000 divided by 4, 15,000 is the amount of depreciation. This is called amount of depreciation. Rate of depreciation. Rate of depreciation, how do we calculate that? Rate of depreciation is very simple. Yeah, amount of depreciation divided by original value in percentage. Original value in percentage, O. So the O here being 65,000, so D being 15,000, original value here being 65,000. If you represent that in percentage, what's the value you are getting? Yes, come on. What's the value? Yes, use the calculator. That's why I told you. Always play with the calculator. 23.08. 23.08. Am I right? 0.8 percentage. Clear? You might have studied that in the preliminary studies itself. Now I am going to deal with the next aspect. Right. Clear? Yes. Okay. Hope now you will be clear with this. Depreciation was already calculated. The Wdb method. For Wdb method. Now, when it comes to the Wdb method, again you have to understand some additional data. In case of Wdb method, the depreciation can be calculated using a formula. Rate of depreciation under Wdb method. This is Wdb method. Nth root of, okay, 1 minus nth root of scrap value divided by original value is the rate of depreciation. This is the formula. Is that clear? How much? N is nothing but year, S is scrap value, O is the original value. Here the N being 4 and scrap value being 5,000 rupees and original value being 65,000. 65,000. Is that okay? Now you have to calculate this. Calculate as per my working here. 1 minus 4th root of 5,000 by 65,000. Then fourth root of 5000 by 65,000. What is the value? 5 by 65. This value being 0.076923. You can take at least 4 or 5 digits. So the more the digits will give more accurate answer. Clear? So the rate of depreciation under WDV can be calculated using this formula 1 minus nth root of S by O. S by O. Now how do I get this value? How do I get this value? Fourth root. So that's why I told you to bring always calculator and use a calculator. So in your calculator, you can calculate this value. You are not allowed to use the scientific calculator. You are allowed to use only the standard basic calculator. I just changed myself to the basic calculator. Okay. Root of 0.0, okay, 0.076923. 0.277349959. Verify that. But it's not root. Fourth root. Fourth root means you have to take again one more root. Root of root is the fourth root. I'll take once again. Second root. The answer being 0.52664. 0.52664. Okay. 1 minus 0.52664. Is that clear? Are you able to get this answer in your non-scientific calculator? If you are allowed to use the scientific calculator, you can directly get it. But if you are not allowed to use this, then you can use the shortcuts. I have given complete tricks how to use the calculator also explained as a calculator tricks in a separate playlist available in Singar Academy website. Go and see that. 1 minus 0.52664. So the final answer being 0.47336. I can represent that in terms of percentage. If I am representing that in terms of percentage, the answer being 47.34%. I can round off to the 2 digits form. So the rate of depreciation, the WDV method here is 47.34%. Hope you are now clear with this. Now I'll use here value or original value on 0th period, value being 65,000 rupees. I am going to calculate the depreciation under straight line method, SLM method of depreciation. Depreciation for the year 1, you have to apply what? 23.08% on the original value. Straight line method of depreciation is nothing but applying the rate of depreciation on the original value. The original value is 65,000, on that 23.08% is applied. Come on. Tell me difference between the WDV value and the original value. Whenever I use the word WDV, it represents the value of, by the end of first year, the value of the assets of the provision of depreciation of 15,000 is only 50,000. Okay. WDV being 50,000. Calculate the depreciation for the second year. For the 50, you have to calculate 23.08%. If you apply 65,000. 23.08% on 65,000 because it remains constant. Will apply the rate of depreciation only on the original value. That's why it is called depreciation under original cost method. Otherwise, it's named as straight line method. Why do I call that being the straight line method? Is very simple. The depreciation charged in the P&L account year on year is equal. That's what about the logic behind. So for the second year, the depreciation being 50. If I subtract the 50,000 rupees, then the WDV for the second year being 35,000. 35,000. Is that okay? I usually use the subscripts with the numbers 1, 2, 0, whatever it may be. It represents the year. WDV in subscripts I used 2. It represents the WDV by the end of second year. Is that clear? Hope you could understand. Now let's go for the third year. Depreciation for the third year, it remains the same, right? So 15,000, because we are going to calculate the depreciation on the original value only. WDV for the third year being 20,000. And I have to depreciate for the 4th year. That year also the amount of depreciation remains the same 15. The balance value will be WDV by the end of 4th year. The WDV value may otherwise be called as book value because the value at which it is going to be recorded is called book value. Usually the asset will appear in the balance sheet at this value, WDV value. So you don't get confused with the terms book value and WDV, both are same, 5,000 rupees. Now get back to the question here. In this question, by the end of 4th year, it is sold for 10,000 rupees. As per my books, it shows only 5,000 rupees, but sold for 10,000. What does it mean? I gained 5,000 rupees because of that sale by the end of 5th year. Okay. So sale value being 10,000 rupees, then the difference between these two is nothing but profit on sale. We have already seen the journal entries in detail, how to handle the case of sale of the assets either in profit or loss also, right? Let's now move on to the next pattern or method of depreciation, which is nothing but WDV method. Under WDV method, the rate of depreciation is 47.34. I am going to use that here. 47.34. Come on, join with me in answering this. The original value in this case is also 65,000 rupees. 65,000 rupees. Now you have to provide the depreciation under 65,000 at the rate of 47.34%. Come on. What is the value you are getting in the very first year? Yes. Yeah, come on, tell me. You have to tell me the answer. Is that 30,771? So 30,771. Always work out along with me. Don't waste your time. Be active. From the 65,000 rupees, if you are subtracting the 30,771, the WDV by the end of first year being 34,229. See, listening my lecture without any active participation will lead to drowsiness and sleepiness. Okay. Do some gimmicks with the numbers, at least make your hands active. And depreciation for the second year, here, I am going to provide the depreciation at the rate of 47.34% on what? 47.3% on what? WDV. That's a, see, you should not get confused with this WDV and this WDV. This is WDV written down value method of depreciation. Under written down value of method of depreciation, the rate of depreciation is going to be applied on written down value. Under original cost method of depreciation, the rate of depreciation is applied on original cost. That's all. On original cost. If you are calculating the depreciation based on the original cost year after year, then it is called original cost of depreciation. Under SLM method, WDV method, we are going to calculate the depreciation based on the WDV applicable for that year. 34,229 for that, 47.34% is supposed to be calculated, and then this value being 16,204. And after the depreciation, the WDV by the end of second year being 18,025. Third year, you have to calculate again 47.34% on 18,025 to arrive the depreciation for the third year under WDV method. Here the value being 8,533. 8,533. Cross verify whether this answer is correct. If you are calculating that in ahead, you can put that message in the chat box also. And the WDV after this being 9,492. Now you have to subtract the depreciation for the fourth year at the same rate, 47.34% on 9,492. This value being 4,492. It may be probably closer to this number, but I make it equal to this number to have the WDV being 5,000. This is rounding off error. There may be chances of rounding off error. It's not exactly 47.34. It is already rounded off. Because of the rounding off, that the scrap value by the end of fourth year may not be matching with the 5,000 rupees, but I can match it 5,000 rupees in such a way the depreciation for the fourth year is going to be adjusted here, right? Now, this is sold for 10,000 rupees. Naturally, I gained around 5,000 rupees because of sale of the assets. Under WDV method or SLM method, whatever the method we follow, the WDV by the end of fourth year will be equal to the scrap value what we have assumed at the very beginning. Is that clear? Now, if you ask me which among these two methods the best, WDV or SLM method, predominantly we recommend only the WDV method. Okay, In WDV method, higher depreciation will be debited to the P&L account, lower depreciation debited in the P&L account later. In the initial stage, we debit huge money, later we debit lesser amount. The reason of debiting extra money in the beginning is it has lower depreciation or no maintenance cost. Year after year, it will increase its own maintenance and repair costs. So, higher the depreciation and lower the depreciation in association with the higher repair cost in the later period will have equal amount of depreciation in the P&L account. You just think over, I am a car driver. Okay, you booked my car to come with me. Okay, see the depreciation already told you the objectives of depreciation to determine the cost. If I determine the cost this way, SLM method for my car, sir, the depreciation is 15,000 rupees. So I will charge 15 rupees and my benefit 15 rupees. So I will charge 30 rupees, sir. 30 rupees, sir. Then which car do you prefer to come? My car or the another friend who followed the WDV method? 30,771 rupees depreciation. He charges 31 rupees. 1,000. Assumed 15,000 is the depreciation. I assume this may be useful for 1,000 kilometers. That's how I assume. Then per kilometer it costs me 15 rupees depreciation as per SLM method. If I charge you 15 rupees depreciation and my charge and petrol charges there, so 30 rupees, you give me 30 rupees, sir, I will come for driving. And another fellow says 31 plus my charges 15 rupees, sir, you pay me 46 rupees. Now tell me, to whom you choose, me or other friend? Here 30 rupees per kilometer driven, here 46 rupees per kilometer driven. Definitely you choose the 30 rupees cheaper, isn't it? Later period, in this case, few years later, the SLM method, this fellow charges again the same 30 rupees. This fellow charges only 15 plus, this is 4,492 for 1,000 kilometers, means he charges around 4.49 or 4.5, roughly 4 rupees 50 paise plus 15 rupees is petrol, so he charges 19 rupees 50 paise. This fellow charges 30 rupees. Whom do you select? First of all, you chosen me, and when the asset is becoming older, still I charge 30 rupees. If I tell you, sir, I am charging 30, that fellow charges only 19.5. The reason why I charge more is my assets are old one. What will you tell you? If it is old one, why do you charge more? If it is new one, why do you charge lesser? Logically, if it is a new one, you can charge more. Then they are happy. So the higher payment will be there in the case of WDV in the beginning when the asset is new. Lower amount is charged when it is oldest one. So if the assets are older, old car, you will be willing to pay old rate or lesser rate. New car, you will be willing to pay higher rate. Sir, 15 rupees, sir. Brand new, just now came from showroom, sir. How much will you pay? 2 or 3 rupees extra also, take it. Sir, this is almost 5 years old, sir. Will run, sir. Sometimes it may have some trouble, sir. By the time you get down and push, sir, we'll go, sir. Get down and push, sir. What will you do then? I don't want to come to your car. So that's the reason the WDV method will be logically better and more favorable in price distribution. Okay, how? Very simple. Let's see here. In the case of WDV method, the depreciation will be 10,000 in the beginning, then gradually it is decreasing like this, 8,000, 6,000 and year on year. And when it comes for the SLM method, in the every year the rate of depreciation being the same 8,000 rupees, isn't it? Okay, the depreciation being same. But when it comes for the repairs, in the beginning year, we don't have repairs. Second year, we have repairs of 2,000 rupees. Third year, we have the repairs of 4,000 rupees. Now, what is the cost here under SLM method? 8,000 first year, second year 10,000, third year 12,000. But when you adapt the WDV method, yes, amount of depreciation is different. The repair is the same. The very beginning, we don't have the repair. First year end, we have a repair of rupees 2,000. Second year, we have a repair of 4,000 rupees. We club these two, the overall value being 10,000 charged in the very first year for the assets depreciation and assets maintenance and repairs cost. Second year is also 10, third year is also 10. Now, the cost of the assets utilized for the production or whatever it may be remains constant over the year under WDB method. Under SLM method, what happens in the very beginning, the cost may be lesser, in the later period the cost may be higher. So, if you are using the old one, it's costlier in the case of SLM. Okay, if you are using the new one, it's very cheaper. Then you prefer to use only newest one. If I am the business owner, sometimes later my asset will be only old one. No, how do I then manage that business? I cannot manage. So logically, between these two methods, WDB and SLM method, which is superior, means always WDB method is superior. And for the taxation purpose, while calculating the income for the tax calculations, predominantly they recommend only which method? They recommend only WDB method. Except a few cases, they suggest go for straight line method of depreciation. Most of the cases we depend on only is WDB method of depreciation. That's a superior one. Hope you could understand the logic behind choosing these two methods. Now, you may understand the formula also here, the calculation of rate of depreciation in the WDB method. So 1 minus nth root of S by O. You can easily understand that. There will not be any confusions. Now, how do I get that formula, sir? Is there any logic behind? It's out of the state. It's out of interest. You can understand this one also, right? Let's see the formula derivation here. How do I get the D? Understand that 0, 1, 2, nth year. I have an asset purchased at rupees, say, O value, original value. By the first year end, what happens? We might have subtracted the depreciation, right? How do I calculate the depreciation for the first year? Depreciation is nothing but O into rate of depreciation. Am I right? This is the amount of depreciation. D is nothing but what? Capital, original value. D is nothing, it's the amount of depreciation. Sorry, D is the amount of depreciation. O is the original value. And either O or sometimes WDB. Most of the cases is WDB only, no? Okay, in the case of WDB method, we are going to depreciate only based on the WDB value. So, amount of depreciation is equal to value of the assets into rate of depreciation. The rate of depreciation is represented as small d, already explained here. So, the D, small d represents rate of depreciation. Year after year, the depreciation is calculated based on the original value multiplied with the rate of depreciation. Rate of depreciation. That's how we get the depreciation. Is that okay? So, from the original value, I am going to subtract O into D. I will get the first year value. That's how it will be subtracted year after year. By the end of nth period, this will be only scrap. Scrap value may be 5,000 rupees. Let's now put that in notations here. Scrap value by the end of first year. Either it may be scrap value or WDB value. Okay, I use the term S represents year end value. So the year end value, first year end, the value of the asset is nothing but original value of the asset minus depreciation. Amount of depreciation. How do you get the amount of depreciation? The method of getting the amount of depreciation is nothing but original value into rate of depreciation. Is that okay? O minus O into D. So whatever the calculations we have done already is now represented in fraction, means notations. O is equal to, so S is equal to O minus O into D. Here O minus OD, where in these two terms O is common, that O can be taken out. The O can be taken out. If I take out that O, then the formula becomes this way. O into, come on, tell me, 1 minus D. So if I take the O outside, don't panic if you are being non-mathematical students. It's very simple. O minus OD, where I am taking O out means, you take the O out, okay, take the O out. This O is divided by O. Then open the bracket. This O is divided by O is nothing but 1. This O into D is divided by O. Then the ultimate answer being D. So minus D. Okay. So that is the logic we get this. Okay. I am dividing that O minus O into D using the O, so that I will get this answer. Now if you multiply inside, you will get the same answer. O into 1, O. O into D, OD. You will get this one. Either you can go from there to here to there, or there to here also will work here. So these are the algebraic expressions. Seems to be confusing, but at least a basic you need to understand. These are the terms are going to be placed in most of the cases, right? You can understand this. So scrap by the end of first year being O into 1 minus D. Scrap by the end of second year, what could be the answer? Scrap by the end of second year is nothing but O into 1 minus D. What is this? This is nothing but S1. It's nothing but Wdb by the end of first year. Wdb by the end of first year. From there, again I am going to subtract the depreciation. How do I calculate? This is nothing but what? Wdb by the end of first year. This is nothing but Wdb by the end of first year. Second year, Wdb by the end of first year minus Wdb by the end of first year, which is O into 1 minus D. And with that, you have to calculate the depreciation. You have to calculate the depreciation. I am applying the depreciation here. And again, we get the two term where O into 1 minus D is common. That can be taken out. So, O into 1 minus D, okay, into 1 minus D. O into 1 minus D into 1 minus D. This can be rewritten this way, O into 1 minus D to the power 2. If scrap by the end of first year means it's O into 1 minus D to the power 1. For the second year, the same formula exists, but power only changes. From this, it is very clear. Sn or scrap value by the end of the life, fourth year end, the value will be O into 1 minus D to the power n is the formula. That's all. This is the simplest formula here. You have to understand. Now tell me, you can get the S right away. You can get this S right away. You can get the S straight away. For example, here the S for the third year is how much? 9,492. What is the formula for calculating S? S for the third year is equal to S for the third year is equal to O into 1 minus D to the power 3. O being 65,000 into 1 minus D is how much? 47.34%. I can represent that being 0.4734 to the power 3. Come on, get me this value. How do I calculate the value of this bracket? Yeah. Okay. See, you are using the non-scientific calculator. 1 minus 0.4734. Okay. So the value in the bracket is 0.5266. To the power 3 means you have to put into equal. If you put into equal, this is power 2. Power 2. Is that okay? Again, into 0.5266. So this is the ultimate value. 0.1460 will be the value here. Okay. 1 minus this value to the power 3, no. This second part, this part is 1.65,000 into, yeah, 65,000 into 0.146, 0.146. Come on, multiply these two. Are you able to get 9,492? Yes or no? See, it's so simple. Under Wdb method, if you want to calculate the scrap value by the end of 5th year or 6th year, you can directly calculate using this formula. Scrap value is equal to original value into 1 minus D to the power 3. Now, if you are using non-scientific calculator, I will tell you the shortcut here. For the power calculation, I don't know whether will I be able to get the same format in computer laptop, calculator, but it will work in your non-scientific calculator. Do this. See, 1 minus 0.04734. Okay, 4734. Power 3, how do I calculate? See, put into in your non-scientific calculator, and press equal. You will get power 2. Again press equal, you will get the power 3. Yeah, of course I am getting here also. This is a shortcut. For any power calculation, put the value, use the multiplication symbol and put the equal sign the number of times you want to get. If power 10 means, what do you have to do? In the case of non-scientific calculator, okay, 0.25. I want to calculate the power 10 of this. 0.25 to the power 5 times. Okay, 5 times. 5 times or 10 times. I'll assume the power being 5. 0.25 to the power 5. Just to put into and press equal, this is power 2. Again press equal, power 3, 4, 5. That's all. That's how you can calculate easily. Are you able to get this in your calculator? Yes or no? This is how you can get the calculator operations also. That's why I tell you, use the non-scientific calculator, get familiar with these usages, right? In subsequent classes, I will use more intensively the calculators, right? Now, scrap value under Wdb method can be easily calculated using this formula. Scrap value is equal to original value into 1 minus d to the power n. But what is my requirement? D is the requirement. I have to calculate D. Rate of depreciation is my intention. Then how do I get that one? It's very simple. 1 minus d to the power n is equivalent to, okay, s by o. S by o. That o goes to the next side. Otherwise, 1 minus d to the power n is nothing but what? That power n will go to the next side as root of n. So, nth root of s by o. Okay. I want d, right? So, minus d is equal to 1 goes to the next side. Here it's a plus 1 means automatically it's a minus 1 plus nth root of s by o, or I need d means d is nothing but d is equal to, that sign is changed. Minus sign is changed to plus d and minus 1 is changed to plus 1. Plus sign is changed to minus, and that's how we'll get nth root of s by o. This is the formula for calculating rate of depreciation under Wdb method. Now, for the examination, is it important to understand the derivation? Definitely not so. As I already told you, these derivation around, I will guide you around 8 to 10 different formulae this week. This 8 to 10 different formulae, if you are able to understand from the root at the foundation level, this will help you up to clearances of the professional exams. Be master with that. So, this is such a wonderful illustration and derivations you have to start with. Is that clear? Now, I have explained all, so I will finish up with one more example. With that, I will finish up this component. Okay. The another one is sum of the years digits method. Sum of the years digits method. This is also one of the methods we have. Okay. Under sum of the years digits method, we can calculate the amount of depreciation easily, almost similar to the Wdb method. Wdb method has some mathematical calculations. If I don't have the mathematical calculations and options like a scientific calculator, I need to compensate similar to that model in a normal calculations. That will be coming under sum of the years digits method. How many years the asset will work? 4 years. The life of the assets being 4. The life of the assets being 4. Now, sum of those 4 years. 1, 2, 3, 4. If you sum that, the value being 10. Okay, the value being 10. Clear? So, year 1, 2, 3, 4. If you sum that, the sum of the years being 10. And the amount of depreciation in the very first year is, you have to rewrite this way, 4, 3, 2, 1. That's all. Okay, 4, 3. If the life of the asset being 5, 5, 4, 3, 2, 1. That's all. It means the overall depreciable amount should be apportioned in this ratio, 4 is to 3 is to 2 is to 1. Or 4 bar 10, 3 bar 10, 2 bar 10, 1 bar 10. If the sum of the years being, the life of the assets being 5 means you have to sum the 5 years. 15 will be the total. 1 plus 2 plus 3 plus 4 plus 5, 15 will be the total. The first year depreciation being 5 by 15. Second year depreciation being 4 by 15. That's how it will come. It's okay. This is called sum of the years digits method. So, first year, the formula being depreciable amount into depreciable amount. That's how you can calculate. The depreciable amount here being 60,000. 65,000 rupees is the original value, scrap value being 5,000, then the depreciable value being 60. Okay. Then first year, 4 by 10 of 60, 24,000. Second year, 18,000. Third year, 12,000. Fourth year, 6,000. Is that okay? The depreciable amount being 60,000, divide that by 10 means per year it's per value being 6,000. For 4 times 24, for 3 times 18, for 2 times it's 12, and 1 time is 6,000. It resembles like what model? The WDV model. Higher depreciation in the beginning and lower depreciation in the later period. The same is now found out in some of the years digits method also, to compensate which method? WDV method. But of course, this is not so accurate as the WDV method. Anyhow, will depend on this in the case of the emergency. Sometimes this method also may be asked in the examination. So let's start with 65,000. The first year depreciation being how much? So we have already calculated the first year depreciation being 24,000. So I am going to subtract the 24,000 from 65,000. 41,000. Second year depreciation being 18,000. Right. For each and every year 6,000 is going to be reduced. So then the value being 23,000. The next year the depreciation being 12,000. Then it is 6,000, and the fourth year the depreciation, okay, 11,000, right? 11,000. The fourth year depreciation being 6,000. If I subtract, then the WDV value by the end of fourth year being 5,000. Sold for 10,000 rupees, you will get the same profit here. Hope so you could now understand the method of depreciation here. I have guided you the SLM method, WDV method, and some of the years digits method also. Not over, means in a natural manner, so detailed manner. You can understand the entire provisions, including the derivation of the WDV method also. Right? Come on, make a note of it. And also, I supposed to pass the journal entry for this illustration. Supposed to pass the journal entries also. Original value and scrap value is there, and life is 4 years. But on the at the time of scrap value, means at the time of sale, sold for 10,000 rupees. Depreciable amount is equivalent to 65 minus 5. Yeah. Here I am going to guide you the past journal entry. 65 minus 5, 60,000 is the depreciable amount. Has a life of 4 years, then it can be amortized over the period of 4. Year after year, 15,000 rupees is going to be depreciated. Now pass the journal entry here. How do I account it? It's the matter here. The method of accounting is the matter here. 0th period, I purchase the asset. What is the journal entry for purchasing? Asset account debit to bank. Assume that the payment is made by way of bank. Value being 65,000. By the end of first year, I depreciate that 15,000 rupees here. Now come on, pass the journal entry for depreciation. Make it faster. Depreciation account debit to asset account. Value being 15,000, right? Year end, whatever the nominal account may be, should be transferable to where? Profit and loss account. So this depreciation should be transferable to P&L account. Yes, come on. Journal entry being transfer entry. P&L account debit to depreciation, transfer entry. The transfer entry here being 15,000. Now repeat this for the remaining 3 more years, right? Pass the journal entry for the second year. Come on, what's the entry for the depreciation for the second year? You can join with me in answering this, and you can do it yourself also. Come on, make it faster. Depreciation account debit to asset account 15,000, and then this amount should be transferable to the P&L account, so profit and loss account debit to depreciation. The value being 15,000. The value being 15,000. And third year end, what happens? Again, we supposed to depreciate for the third year. The entry being depreciation account debit to asset account. The value being 15,000. Next, this depreciation should be debited to the P&L account. Am I right? So P&L account debit to depreciation. And fourth year end, what happens? Again, we have to create the depreciation. Not only that, that's the last year of the life. The asset sold for 10,000 rupees. So in the fourth year, again the depreciation value being the same 15,000 as it is being straight line method of depreciation to asset the value being 15,000. This depreciation should be transferable to the P&L account, so profit and loss account debit to depreciation. This value being 15,000. The next will be, as it comes to the life end, no more the asset is useful, so it can be sold off the market. On selling it, it is sold for 10,000 rupees. As per this provision of depreciation, we came to know the value of the assets being only 5,000 rupees. But sold for 10,000 rupees means it gives me a profit at the time of sale, right? Come on, pass the journal entry for sale. You get the money, right? Bank account debit. How much I am getting? 10,000 to asset. The value of the asset here being 5,000 only. So as per the book value, it is 5,000, sold for 10,000 means we get a profit of rupees 5,000. That profit should be credited in the profit on sale of the assets account, and later it will be transferred to the P&L account. Straight away you can name it as being P&L account in bracket profit on sale. In bracket profit on sale 5,000. So this is one method of accounting treatment. In this accounting treatment, the depreciation is reduced. The depreciation reduces the value of the assets. In another method, we are accumulating the depreciation in new account called provision for depreciation. Let me try to solve the same illustration under provision for depreciation model also, right? Finish up copying this, I will go for that method then. It's a normal illustration. Now I am going to pass the journal entry where the depreciation is being routed through provision for depreciation. Rather than we are subtracting from the concerned asset account year after year, I am going to add to the provision for depreciation account year after year. You understand? Let's see, I am going to pass the journal entry in the very first year. At the 0th time, I am purchasing the asset. The journal entry for purchasing the asset being asset account debit to bank. The value I spent here being 65,000 rupees. 65. I write the value in thousands. Okay, in thousands. 3 zeros removed. First year end, I have to provide the depreciation. What's the journal entry for depreciation in usual case? Depreciation account debit to asset account. But I am not going to subtract that value from the assets. But it is going to be added in the provision for depreciation account. So new account named is provision for depreciation account. Value being 15 for the first year. Second year, then the depreciation should be debited to the P&L account for the first year end itself. So profit or loss account debit to depreciation. I am repeating the same year after year up to the life end. Come on, pass the journal entry for the second year end. The same depreciation account debit to provision for depreciation. Provision for depreciation. The value being 15. And then the depreciation should be charged to the P&L account. So profit and loss account debit to depreciation. The value being 15,000. The value being 15,000. Third year end, again depreciation account debit. Depreciation account debit to provision for depreciation. Provision for depreciation. The value being 15, and then the depreciation should be debited to P&L account. So profit or loss account debit to depreciation account. This value being 15. Fourth year, I am repeating the same depreciation account debit to provision for depreciation. 15 and 15, that depreciation is debited to the P&L account. So profit or loss account debit to depreciation account. To depreciation account. Is that okay? Hope you could now understand this. Now the entry for sale, how do I pass this entry? On sale, the journal entry being, I am getting the money, bank, how much I am getting this? 10,000 rupees. To asset. What is the value of the asset? What is the value of the asset? No. The value of the asset is 65,000. I have not subtracted the depreciation from the assets. The asset will continue to appear at its own original value of rupees 65, right? I have not subtracted that. So the value of the asset being 65. Then what happens to the depreciation? The depreciation is accumulated in a new account called provision for depreciation. See, the new account comes here, provision for depreciation on the credit side. 15 is created in the very first year. Second year, another 15 created by crediting it. So 15 plus 15, 30. Third year, again another 15 will be there, 45. Fourth year, another 15 will be there in the credit side. So in total, we have 60 rupees in the provision for depreciation. Is that okay? Once the asset is not required, then why do I have to maintain the provisions? Provision means if anything happens to that, this provision can be used for adjusting that. On sale of the assets, provision is not required. So when you are supposed to sell the assets, automatically the provision is also not required. So usually the provision is in the credit side. On sale, that provision should be now debited. That should be debited. So provision for depreciation. Provision for depreciation. Debited. How much is that? 60,000 rupees. If there is any difference, the difference is named as what? Either profit or loss. 70 in the debit side and 65 in the credit side leads to a profit of 5,000 rupees. Okay. So, to profit on sale or simply profit and loss account, in bracket you can name this as profit on sale. 5,000 rupees. Now, let me brief here in the trading and P&L account and then balance sheet. In the P&L account and then in balance sheet. Under first model, the asset value probably 65. In the very first year, 15 rupees is depreciation debited in the P&L account. On the same time, I am subtracting 15 from here, then it becomes 50. Second year, again I am debiting depreciation 15 rupees in the P&L account. From the 50, I am subtracting 15, then it is appearing as 35 in the balance sheet. In the third year, depreciation 15 is debited in the P&L account. The opening value of the balance sheet, the asset item in the balance sheet being 35 and the depreciation for the third year 15 is subtracted from here and 20 will be the closing value. In the fourth year, the depreciation being 15 and the opening value of the asset in the balance sheet being 20, from there 15, the last year depreciation is subtracted, it becomes 5 and finally it is also sold. So that will not exist. This is the first model. In second model, what I do is in P&L account as well as in balance sheet. In the second model, depreciation 15 rupees in the debit side of the P&L account as usual. Asset value being 65 in the asset side, that provision for depreciation could have been recorded in the balance sheets liability side as provision for depreciation. 15. In the second year, depreciation to be debited in the P&L account is 15. In the balance sheet, that provision for depreciation will be increased to 30. 15 plus 15, 30. The asset appears at the same rate, 65. We won't touch the value of the assets under the second model. And then depreciation for the third year, 15 debited in the P&L account. And then provision for depreciation being 30 plus 15, 45. And here 65 asset value remains as it is. Then under the last fourth year, the depreciation again I am debiting that in the P&L account 15. In the balance sheet, the provision for depreciation is 60, it becomes 60 and then the asset remains 65. As we plan to sell off, these two will be neutralized. Once we plan to sell the asset value is also eliminated, provision for depreciation balance is also being eliminated. asset value in the debit side, right? So on sale it should be credited. Provision for depreciation in the liability side means credit side. To eliminate its value, it should be debited. And neutralize the sale value with that, so to find out any profit and loss because of this. Is that clear? That's the predominant cases you have to understand. But you may have not seen such a model in your text. The provision for depreciation may not be shown in the liability side if you refer most of the text. The other way of recording this case is, this is the method. I'll guide you here. Right. In the balance sheet, they will write this way. Asset value 65, provision for depreciation 15, so balance is 50 for the first year. Second year, asset value is how much? Also 65, provision for depreciation 30, and it is recorded as 35 in the outer column. Third year, the asset value is 65, the provision for depreciation is 45, subtracted and written as 30. The last year, 65 and 60 is subtracted and 5 rupees. Okay, this is 20. Okay, 20 and 5. This is the process we usually follow in the text. You understand the difference between this model and this model. Here, from the WDV I am subtracting. Here, from the original value, the depreciations are accumulated and subtracted. That's the main difference. That's the main difference. You should not miss out of it. And for this only I have given this journal entry. You have to clearly understand this journal entry. Why do I credit the asset as well as debit the provision for depreciation? You have to understand. This is the another method of providing the depreciation. And you have to note one more variant here. While selling the assets, sometimes they will sell by opening a new account called asset disposal account. In the case of first model, means charging the depreciation in the asset account, means subtracting from the asset account. How do I open the disposal of assets account? As well as in the second model also, you have to understand how do I open the disposal of assets account separately. If you understand all these things, then the treatment of accounting will be easier. Okay, come on, make a note of it.